Bro, look at how wild this joint is swinging. I mean, it's 15 minutes past the market open. But is it Jew Whitaker? Bro, I know you said if it's not too much, and I gotta be totally honest, it actually is too much. It's a lot to try and go through and tell you the reason why I put the trade on, because of the amount of work that goes into determining whether I'm gonna put a trade on or not. But and you can probably look at some of my old posts and see I learned from a school, bro. It's like a real long process of going through, and I don't know if anybody else from the school is in here, but I don't want to be copyright infringing on their intellectual property. That's why I don't just give out their stuff, because I learned from them for free. I mean, I didn't learn from them for free. I paid for it. This stuff is copyrighted. It was an actual class that I took. And so because it was an actual class that I took, it was, it was 3 classes. It was a total of about 120 hours. And I mean, it cost me, a couple $1,000 to take these classes. I want to say maybe I paid about $4 total for all 3, something like that. But anyway, it's a real long process, but I can say broadly, because they, cover some of it on their YouTube. I basically go through macroeconomic data and determine what I want my portfolio bias to be. And after I go through that and determine what I want my portfolio bias to be, I go through different sectors and I look for outliers in various sectors. Once I find the outliers in various sectors, I do further work on those outlier symbols. And by further work, I mean I need to determine the reason why it's an outlier. And that could be positive or negative. I want to determine why it's an outlier, positively or negatively. And then after that, I do more work to determine just how engaged the management team or the executive team is. And once I determine how engaged the management team or executive team is, then I go through and do a complex trade structure that can make, wild returns. But I'm also mindful of how much I'm risking on every single symbol. So the amount that I'm risking on every single symbol, adjusted for the amount of risk or volatility, is essentially the same for just about every trade. And that just depends on my bias, how convicted I am about the trade idea that I'm putting on. That's what they call it, trade idea generation process. So it's a really, really long process, but it made me more confident in leaving my trades on for longer. And that's why I be trying to tell people they need to join the school or, invest in the education. But I'm not gonna lie, bro, it's really not for everybody. It's like a lot of work. It's not for everybody at all. I promise you. It's absolutely not. Remember I said it's 120 hours and it costs a lot of money. So that alone rules a whole bunch of people out, because people just probably not gonna want to do it because it's not entertaining stuff. It's boring, but it's from reputable people who were actually professionals that were traders for big banks and hedge funds before the Volcker rule. So yeah, man, it's a lot, but it fluctuates a lot. And here's another tip: I don't trade this early, when the market open. But yeah, sorry I couldn't be more specific, but like I said, it might be some other people in the school, and I can't tell you the ticker because I'm still trading it. You see it still moving around. But yeah, I wait for the volatility to settle before I decide whether I'm going to take a trade off or, make a move because of how wild it swing. So it's settling around like 11,000. But yeah. All right, man. Take care. Hope this helps somebody. God bless.